Meanwhile, various efforts to reduce reliance on the US dollar in global trade are putting the future of this dominant currency under the spotlight. US President Donald Trump has set his sights on the BRICS group, launching threats and criticisms against the creation of a common currency that could challenge the dollar's long-standing dominance in global trade. Andre Cilliers, Director and Currency Strategist at Treasury-One, joins us now to unpack these efforts. Thank you so much for your time, Andre. Now, the offensive that Trump is on right now and the fight to really escalate US and dollar dominance and to really isolate the US from a global trade, could it in fact push favor towards the de-dollarization agenda further?
If you look at what Donald Trump said, then he does not like the de-dollarization at all. And if talks continue of de-dollarization by the BRICS countries, and they move closer to that, I think that would jeopardize trade with the BRICS countries tremendously, which could be very, very hurtful to BRICS countries. So I think from the talks that there's been before about de-dollarization, and I know that from South Africa's point of view, when Donald Trump had mentioned that he will impose sanctions and tariffs and all these things on the BRICS countries, had already stepped back one step and said that was never the idea to move away from the dollar. So we have certainly from our side in South Africa said that that's not the idea. So I think if you look at what Donald Trump is busy with in terms of tariffs and sanctions and all these things, I think that would put de-dollarization from BRICS side a little bit for the moment on the back end, and countries would be starting to become more protective over their trade with the US. And obviously for some countries it's more important than for others. But as far as I'm concerned, in most of the big countries, the United States of America, being the biggest economy in the world, plays a massively important role. And the impact of that is more widespread than just the trade. It's in terms of cost of goods, value of currencies, the impact on interest rates, the impact of that on inflation, etc. So no, I think for the moment, de-dollarization is most probably a little bit on the back foot.
Yeah, it's quite interesting that the BRICS countries have actually come out to say that it's not that they want to move away from the dollar, but really to be able to trade more within the BRICS bloc using local currencies. I actually want to delve deeper into that. How practical is that? And would that be an easy decision to make at the snap of a finger? Or does the trade dynamic, the trade landscape within BRICS need to substantially support that sort of exchange?
The interesting one is that, you know, when you look at imports and exports of companies, for instance, then if you export something to the value of $10 for argument's sake, that does not simply mean that the price, everything in that thing is made locally. A lot of that is imported. Now, when you start importing part of that exports of yours, then you have to pay in US dollars. So now you're going to end up with two currencies. Previously, you could set off and say my imports is $4 of the 10. The export value is $10, so I need to look at hedges of $6. So now you can't go to your customer and say, you know, pay me $4 million in US dollars, and the balance you pay in my local currency. You know, so there's a lot more complexities to this than meets the eye. When you simply look at trading between counterparts within the BRICS countries, yes, then that would be able to facilitate that in local currency. But that does not mean that you move away completely from currency risk. As I've explained, you might have imports to pay in a different currency. So that doesn't eliminate currency risk at all. So it's not so straightforward. at all.
And talking about complexities, you also spoke about sanctions as well. And we know that we trade using dominant payment platforms like SWIFT that is in line with U.S. policies, and also that trade using the big currencies, the U.S. dollar, euro, pound, and so forth. With us trying to move away from the dollar and maybe also trying to trade with countries like, for example, Russia, that has been sanctioned by those big payment platforms, would we be able to get around platforms like SWIFT and maybe work on our own payment platforms?
Well, you see, that's another interesting one. Working on your own payment platforms, everything, all the banks worldwide works on SWIFT.
Yeah.
So now you would have to get banks to adapt their systems if you come up with a new payment system. So it's not that easily, and the cost involved might be so dramatic that it's absolutely not worthwhile. It's like reinventing a wheel that's already there. So it makes no sense to do that and try and move away into new payment systems and so forth. That once again has got an impact on not just the banks, it's got an impact on companies' own treasury management systems that's linked into SWIFT and so forth. So no, that opens up a big can of worms at massive cost and massive development, which I definitely do not think is absolutely worthwhile at all.
And also the idea that is floating around of a common BRICS currency, would that be practical considering the different economies that are within BRICS, and obviously the different weighting of the economies and I guess power that they have? Would it be not be complex to get to a common decision and outcome, considering, I guess, how fragmented those economies are within BRICS?
Okay, so now if we go to one currency, call it BRIC,
yes.
Call it a BRIC. That's very much the same thing that the Euro people did when they started with the Euro. Now you have to look at budget deficits, you have to look at current account deficits, inflation, central bank policies. You have to have one central bank. That is really another cat amongst the pigeons. That's not easy. And if you look at the emerging markets or the countries that's within the BRICS group, then the differences between them is so big and so vast that it would take years to get all of those countries within certain parameters and managing their economies within those parameters to remain within that BRIC and to keep that BRIC stable. If you do not do that, you would have a very unstable and an extremely volatile currency, far more volatile than what some of the local currencies is that the various countries have. So I think that is definitely years and years and years away from us because of the vast differences in the size and the parameters and the vital statistics that I also speak about, current account deficits, inflation rates, and so forth. That's vast differences between the countries. So no, that I think is absolutely years and years away.
Yeah, well, we do have to wrap up the conversation there. Thank you so much for those insights, Andre. It's going to be really interesting to see how the journey of BRICS unfolds, particularly from a currency perspective. That was Andre Cilliers, Director and Currency Strategist at Treasury-One.